Hello and welcome to a very special interaction today we've got lined up, and since it's Diwali and since there's someone who talks to us once a year, so we thought why not make use of that opportunity. Manish Chokhani on the show right now. Manish, wish you a very happy Diwali.
Thanks for having me. Happy Diwali to you and all the viewers.
Thank you so much. You know, our theme this year is Ye Diwali, Muskan Wali. You already have that Muskan, but what's bringing that Muskan besides, of course,
I was remembering RRR, so thankfully that's not coming back.
No, we've got a better googly for you this time. He's still scarred from it. But yeah, much like RRR, the way it, shot up all the way to the Oscars, so have Indian equity markets, despite all odds, right?
Sure. So, well, a lot of things to feel bullish about.
Yeah.
The underlying economy is, of course, doing very well as I've seen in the last 30, 40 years. And the trajectory certainly seems set. The mood is certainly buoyant, so it's reflected in the prices. But reality is, if I look ahead a year later, post-election, and from the external perspective of the world looking into India, your MSCI weightage is going to probably double. You're going to get all the bond fund inflows, not just JP Morgan, but Barclays and Bloomberg and all the others will follow as well. And every single boardroom in the world is clear they're not putting more money in China. And India is centerpiece of FDI flows. So if I put the three things together, FDI, FPI in equities and debt inflows, the country is slated to be getting in excess of $100 billion starting post-election, which solves a lot of things even on balance of payment side and starts then getting your inflation down, which is being imported today, and gives you purchasing power and a continuation of the aggregate demand in the country. So from all accounts, we could be in the coming decade the momentum market of the world. So having said all that, a lot of it is in the price. Because as Buffett says, you pay a high price for a cheery consensus, and we are right now in that sort of zone. And we always say in NM that bhav or bhav, dono pe dhyan do. Bhav as in price and bhav as in your emotion. Both have to be in check. And right now the prices are slightly elevated, as are our emotions. But it's also justified. So if things do work out in the coming election and no accident happens in the world geopolitically, I think it's a decade of very, very strong growth ahead for us.
You know, all your assumptions are based on post-election, and there's a big if that you just mentioned. Yeah. Is it really a big risk?
See, it is a big deal. We all try to pretend that it's not, and it won't be a risk until it is. Because what you're betting on is not a person or a party, but really policy continuity.
Yeah.
And one has seen exactly the opposite happen in China, where the big momentum they had, and Xi Jinping went and broke the confidence of the business community and the real estate collapse, and therefore all the stock market collapse. And a country which is 5 times our size, $17 trillion economy, today trades at half time of its GDP. So the sentiment can turn on a dime. And while most leaders in democracies are really followers of trends, and I do believe that after a correction, if things turn out another way, market basically digests and makes a new set of assumptions and then carries on.
Yeah.
Because eventually the billion people are going to work and they are going to consume.
Yeah.
And the demographics are right. The entrepreneurship which is unleashed can't be held back for long. But when you get a gap, you fall back 15% for then saying, let me put time value of money there. So certainly there is a risk to it. Market currently I think is pricing, there is no surprise, despite what happens in state elections. And a lot of, I'm guessing, even the banking sector nervousness is if something happens, then the taps are really open through the banks to disburse money, which you've seen in the US and other countries. So I guess once this kind of event is out of the way, I think you should see a very, very strong period ahead.
Okay. So let's spend some time discussing bhav and, bhav.
Yeah.
Now, first, let's discuss the lay of the land, which is where markets have gone up, where markets have gone down. Data point just for reference here. I'm sure you know the data. The small cap index, 30%. Mid cap index, mid 20s. Large cap index, 10%. So, the entire excitement in small and mid cap stocks, can I say the tail has started wagging the dog?
Well, see, in an economic expansion, when you have rotation, it's expected that the small will run because small amounts of money tend to lift them. And like even when I'm saying that India gets 100 billion, in the context of the world, it's a very, very tiny amount.
Yeah.
And that's enough to take us through. Because if you put, let's say the last few years, we got FIIs coming in post-COVID, 25 billion, then 25 out, then 25 in, and then again 25 out. But that 50 billion which they sold got absorbed locally. So I'm assuming the trend of the 25-50 of FII flows plus the 25-50 of domestic flows, we've never seen it coming together at the same time. At which point India will look like a small cap. So in the short run, what has happened is certainly you've gone at, the less liquid companies are the ones rising the most. But if you come from an external perspective and say in this whole country, like I was telling a friend who keeps telling me India is expensive, I said, buddy, 1/3 of our market cap is financials. And let me give you the menu card. Here's Canara Bank on a 5 multiple, BOB on a 6 multiple, PNB on a 7 multiple, SBI on a 8 multiple, IndusInd and Axis on a 11 multiple, IDFC on a 13 or 14 multiple, and my finest ICICI and HDFC are on a 15 multiple. What expensive are you talking about? So because you don't see momentum, you think it's expensive. But clearly this market has a lot of room and legs to run. Our large caps also, like the Reliances or the Adanis or the IT, it's not like they're expensive. You may have nervousness about whether the economy will prosper, what their earnings will be, but I don't think you're not buying them because they're expensive. So in that context, yes, that the over-exuberance I find is really in the small cap SME exchange. There's something crazy going on there. And I think it's some accident waiting to happen. The small caps have gone up, but it's not large enough to damage sentiment for the whole market. Because normally you used to see some very, very large player or very large company blowing up. And that leverage leading to trouble. You don't really see signs of that. So we are still, I think, in an early stage of a long-term bull market. These corrections are good, which is happening, or you go sideways for a while and then catch up. And it was also expected that the cyclicals would lead. So if as an industrialist you're putting up capex, you'll find capital goods going up. As a household, you're buying homes, so you're finding real estate or home improvement companies going up. But what I find is eventually the intersection of all these sits with the financials, where the country is going to financialize very, very massively. So unless you get massive uprise in the financial sector, and not just banks, but everyone, asset managers, stock exchanges, depositories, there's a decade of very exciting growth ahead of them.
Now the other bhav, which is the total interest. The FI positioning in India is at a relative low. It's below 20%. That's not a danger sign, but that is the proof of the pudding. Second, the FI FNO short. I looked at last week's data. It is at a multi-year high. Just for the benefit of our viewers, these indicators are that FIs, the word which we use, Gora, has not really invested in India, or they've decided to stay out of India. This is the point you're making, that when they will come back, there would be paucity of sellers. But will they come back, and why will they come back?
So look, if you look around the world, I mean, let's say what I call the developed world is undergoing a Japanification. Japan, for whatever you say, market's gone up, but the yen has collapsed. What's the point of that? UK is really like now the sick man of Europe. Europe itself is in doldrums. And the US figures also, while we all have this myth of the almighty dollar, the way the government has abused their fiscal leeway, they run now $1 trillion of interest payment, which is 4% of GDP is now the interest payment in United States. How long will the world tolerate this? And there is a bond market and a currency market route coming. But if you're a bottom-up business leader, and you see there is a very large economy, steady state grows at 6-7% a year, real, and the currency is stable, and if anything will only appreciate now, what will you do? In every boardroom in the world, starting from Apple to Tesla to everybody wants to come here. Why have they not yet come and put sizable bets is because, like you and I would, as a prudent person, say, let's just see if this government changes, will there be some new regime? Will they go back? So again, whether it's a small investor in a stock or a large investor in putting his business investment here, you want policy continuity. And if they see some sign of that, I think the deluge of money coming our way, and you'll be surprised what then happens to our infrastructure creation, to our manufacturing creation. All of that is, I think, very, very early stages yet. When we last time spoke, we spoke about EMS as an example. And I gave you the analogy of what happened when G came to India with software services.
Yeah.
What happened when Suzuki came to India to the auto industry.
And we shamelessly copy this, quoting you every time.
Okay, that's great. So just for benefit of viewers who didn't hear that if Apple comes to India and says we want to go from a 10 billion run rate of exports this year to 100 billion, what it does to your ecosystem for electronic manufacturing, everything you buy now from your TV to your fridge to your car is electronic manufacturing. That whole industry ecosystem is getting created. I think Tatas have finally taken over the Wistron plant and they will make now the Apple phones as well. It's a very, very big movement of manufacturing happening in our country.
No,
go
go
ahead.
No,
Not
please.
complete. I'll keep rambling on.
Okay. No, because when you talk, there are just so many follow-ups that one has in mind. So before I forget, you've made all assumptions post-election, right? You've also talked about what the US is positioned at, where we are at. As a tactical strategy, what do you do? Because market is a forward-looking beast. Market's not going to wait for the election outcome to move, right?
So I'm in the happy position of I don't care. Because
you are, but most
I don't
of our
have
viewers
third-party
are
money.
not.
Most people who watch also have their own money.
Yeah.
So it's only the professional crowd who worries will I outperform in 3 months and 6 months. We honestly don't care. If you just think, I started, and I know I'll date myself, 35 years ago. Reliance had a net profit of 150 crores. 150 crores. There will be north of 80,000 crores. If you did nothing and just sat down and you know this company is going to be there for 10 years, their capital allocation is generally okay, they make a return which is north of 15% on equity. You will have your ups and downs, but when you look back 5 years later, and I'm assuming your starting point of valuation is not crazy, it's inevitable you'll make money here. You're not going to make it in fixed income. You're not going to now make it in buying real estate, and you're not going to speculate on real estate. Where will you have to create wealth with businesses. And there are plethora of businesses coming. I go around to see the states now because of so many companies. The development in states, we all know about the great stories of Gujarat and Tamil Nadu and so on. We've all heard about Uttar Pradesh. I recently happened to be in Uttarakhand. We just yesterday cleared projects in Odisha. The amount of work going on and the pace at which they're working, the clarity of thought is incredible because the states are now rising. And when you see that kind of widespread entrepreneurship, not only in youngsters, but also in government agencies, I think our period is here. So I think the best 20 years of India lie ahead of us, not behind us.
So you're saying just sit tight, do nothing right now?
See, in a bull market, if you try to change horses midway, like if I think, last year a lot of banks didn't do well, why don't I jump to real estate? And next year I'll try tactically, I'll jump from real estate to auto. Yeah. You'll miss because you miss not being invested, and if you miss the best 15-20 days of a market in a year, you basically give away your returns. So whatever you like and you understand, market doesn't owe money to anyone. So if I understand financials, I may deserve to make money in financials. But if I jump into real estate, which I don't know a lot about, I don't deserve to make money there, and I may not. So we say in India that your Lakshmi and Saraswati has to go together. Where you have knowledge and insight and you do the hard work, then you make it. And I just added for my family's benefit that please take Durga Ji also, who's the goddess of emotion. And unless you have a happy family, you can have all the wealth. If you don't have health and you don't have happiness, what will you do with all the wealth? So if you keep three in conjunction, that's the beginning of a good life.
Which is a good point. We always say Durga and Saraswati, Lakshmi and Saraswati, but market is greed and fear. It's about dealing with human emotions at the end of the day. That's what bhav and bhav.
Exactly.
Okay, now the big question which you're asking everyone, and it's quite puzzling to see that banks have got everything going for themselves. Credit offtake decent, NPAs under control, India is consuming more, retail book is strong. Yet, the category is under pressure.
Yeah. It's like I always say that we are fighting the last war. And a lot of us who grew up in the last 10 years got so scarred with what happened to banking that we are apprehending this will happen again. And it's too early in the cycle to say NIMs have peaked and therefore growth is gone, CASA won't come. I just explained to you why on $1 trillion saving rate, to say this country will be starved of CASA is a bit kind of naive. Also that the NPA cycle is already started because of the subprime loans in the below 50,000 category. But that, NBFCs and microfinance are playing there. I don't think you talk to SBI or HDFC or anyone. They don't need to go to subprime. There's such a large runway of opportunity for them. And the industrial capex is still starting out. So you're still at the beginning of a capex cycle. You can't be, you say I'm bullish on real estate, but I think there's going to be problem in people lending to them. If I'm buying a house, I'm buying my car, I'm buying my durables, and I'm putting up my factory, and it's beginning of the cycle, how can I be already worried that this is going to blow up? So I think it's a bit misstated. And I often give the example, like in the US when they had their bull market, all of us would have sat here when my son was studying in university in 2015. You could pretty much say Google, Apple, Microsoft, Tesla are all going to do well. And you just rode them for 5 years and they're still doing well. I mean, actually the results are not so good anymore, but the stocks are still doing well. So there's probably a gap there. They may need to correct, but we are still early stages of that.
So let's divide the market in, like we always say on on Dalal Street, अच्छा और सस्ता और महंगा, अच्छा मगर महंगा. So just I'm going to break it for viewers. What is good and cheap?
Right.
What is good and not expensive? Is expensive.
See, expensive bit has been very easy for years, that we waited for the consumer FMCGs to catch up to their earnings. And there were few like Hindustan Lever or Nestle who surprised on the upside. When Sanjeev was running the company, he not only got you volume growth, he got margin expansion.
Yeah.
And you were earning surprise, and that led to massive re-rating. Same thing with Nestle after the Maggi crisis. I think you got a big runway over there. Tata Consumer then had a morph, going from a tea company to actually an FMCG company. Then you had someone like Varun Beverages who came in, who expanded the degrees of freedom. So you had money there, but I think they've been stretched a bit beyond. And when you have a cyclical upturn, people go to the consumer discretionary, which is your cars and your durables, QSR, eating out. They're all doing actually well. There may be some slowdown because of the K-shaped recovery. But again, from a runway perspective, you have a long way to go. I've shared data in the past even that we used to call India 3, 6, 12, 24 market, where there were 3 million cars, 6 million air conditioners, 12 million refrigerators, and 24 million two-wheelers. If I put the China number, and let's say we take 10 years to catch up, against 6 million air conditioners in India, China sells 210 million. I'm just pausing to give you time to calculate that. Against our 3 million cars, which is now inching towards 4, they are at north of 25 million cars.
30 million is what I read.
And the average car is a Toyota Altis, which is a 25 lakh rupee car. We may still be at average of 8 lakhs here. So 3 times on price.
अब SUV बिक रहा है India.
Right, so lots.
Now SUV has 55% market share.
But still the average selling price of a car in India with GST is still below 10 lakhs. So, and the tax rates are very high, 28% to 42% is what you're paying on your car when you're buying. And if auto is 50% of India's manufacturing GDP, we are doing a disservice to ourselves by this kind of high taxation. So all this is going to change in the next 5 or 10 years. Watch the space. So again, to answer your question, so the consumer FMCG types are a bit expensive because the acceleration can come on the other side. They are being priced. So consumer stocks are by and large expensive. Manufacturing opportunity is explosively large. Some of it has been captured. Some of it, for example, chemicals was doing well, then it's had a downturn. They may have formed a bottom, and there may be opportunity to go back over there if you take a 2-year view, not a 6-month view. So there will be stuff like that coming. But like I said, the center point of this bull market is going to be financials. I just wait and pray that they allow NSE to list. Then let's see action.
Yeah, I mean, okay.
Yeah.
Now,
No.
So I'm going to rewind our conversations because the context what you're setting for us is exactly like the context you set for us 15, 20 years ago when the real deal bull market started in 2003 and 8. So one great example which you gave me was that bet on entrepreneurs in their 40s. Right? Enam came out with this lovely report that 40s when you're learning is the best and 40s when you have the time to take a risk and build a business. So what are the folks you like in the current 40s?
See, Nikunj, the fact is, that time when I wrote it, I was also getting into the 40s. All the boards I'm on are all in their 50s.
Right. So the new 50s
and
then.
because there's so much, focus on health and fitness now.
Right.
50 is the new 40.
Okay, I grant you that.
Like I'm like a 40-year-old.
I grant you that.
Right?
So I grant you that. But the question is that
if someone will
guys?
just study all the boards I sit on, just look at the companies and see what is the runway ahead of them. Unfortunately, in few of them I'll be stepping out because I've completed 10 years. but there are few I've stepped onto also.
Which are the ones you've stepped onto? It's public information, so you can
It's
share
public.
with us.
So, I mean, the
Then
last
we
year
can
was,
share
for
about
example, Wellspun Co-op or Landmark Cars and stuff like that. The old ones were the McDonald's one, Westlife.
And Z.
And Shopper Stop. Z I stepped off because of whatever was going on there. But you saw what runway was ahead of it. And similarly, there's runway here. Unfortunately, being on the board, I can't buy the stocks. But one can help shape and be part of what is happening in India.
My next question is, in extension of that, you said when India's market cap was not even $1 trillion, that 5 corporate houses would be building the next couple of $1 trillion for us. And that time you were vocal about Reliance.
Bataj, we called it.
Yes, yes. So who are the
Birla,
ones?
Adani, Tata, Adani, Jindal are the
Who's
centerpiece.
the sixth is the question.
Who
Who's
are
the
the-
sixth?
I do think all the
Bataj are going to be
Wellspuns,
there.
the Torrents, there's explosive opportunity ahead of them. Like Wellspun results out, so I can just share yesterday. So if there, there's mega bull market going on in steel, in the oil and gas space in US, in Saudi where they are present, and in India. In water because of the Har Ghar Jal, there's pipes going on there. They've acquired Syntex, they will do plastic pipes also to get into your home along with the tanks. So as you say, the degrees of freedom expand, and if you're conscious on capital allocation and ROI, there's no reason why you can't be showing 20-25% return on equity on a levered basis, on a expanding opportunity set. So a lot of these companies are going to do extremely well.
Right. But Manish, in this tectonic shift which is now happening towards manufacturing, infrastructure boom that you're currently seeing all around you, would you write off any sector? Would you say...
It's hard. Like I said, see, in a up move in an economic cycle, at different points, different sectors will show you because we go for rate of change. But if you look through the whole cycle, who is going to be the steady eddy who will do a 20% type compounding for you, and if multiples re-rate, that's really what you want to bet on.
Capture, yeah.
That I'm starting on a lower multiple base and I'm getting the return
But
on
that's
equity
not IT.
takeoff.
What I was
So
pertaining to
IT,
sectors
IT
like
I think
IT.
is in a a structural shift because of what's happened with ChatGPT and the others. And the nimble guys will probably make it, but I mean, if honestly, if you can buy platform companies, you're not going to go to now the service companies. If you understand what I mean.
Yeah.
They're still great companies with great cash flows, but I think there's some business remodeling which needs to be done there. Similarly, I've been vocal about pharmaceuticals that in the world, if over the next 5 or 10 years you're going to go more and more towards biology and CRISPR technologies, then the old chemistry-based
Lab-based.
bomb the
Yeah.
illness and get rid of it. That's going to change. So the old stalwarts in IT and pharma, which led our export thrust, I think morph towards IT hardware with the EMS guys, automobiles, because we have shown we are competitive with the world, and manufacturing becomes center stage, and the chemical companies actually have a big opportunity to become large. As you move out of Germany and China, I think a lot of companies will become very, very large over here. So that's as an example, that's going to change. But again, like I keep coming back, don't forget financials. Your starting base is not expensive. It's a large segment of the market, and if you can make money on Main Street, you don't need to go into buy lanes.
And you can capture all these sectors
And
via
everything.
financials.
You can get, exactly. So if I'm bullish on housing, I'm capturing it through that. If I'm bullish on asset management, also I can capture it there.
Yeah.
I'm bullish on exchanges, I'm bullish on lending to consumers, to corporates.
Everything via
And
banks.
if you saw the rotation that when HDFC and Kotak went flat, it went to the corporate banks. Then it went to the mid-cap banks, which are the IndusInds and the IDFCs. The PSU banks have actually done remarkably well.
Yeah.
Like I know for us, after it's tripled, Canara Bank is still a 5p multiple. So which means when we bought it, it was on a forward 1.5p multiple, and it's still half a book. And there are others, so all are catching up. PNB, BOB, Union Bank, all of them there. And people who said I'll never buy PSUs, they saw what happened in defense and railway and all of that, and they had to forget that they have an aversion to PSUs.
Is that frothy though? The entire PSU pack,
See,
ex-banks.
It is because normally you want to pay for terminal values, which is long term what happens. And if we are already saying we don't know what happens in the election and maybe policies change,
Exactly, yeah.
do you really want to be there and you're dependent on pretty much one customer? It's not a space I feel comfortable about. So those in your language may be tactical trades, but they are not secular hold for someone who wants to sit for 5 or 10 years.
It's easy when we say financial means private banks. whether it is
No, you can
Kotak
buy
or whether it's
everything.
HDFC Bank or PSU banks. But is it important to now start thinking beyond that? I mean, a Paytm technically is financial.
Yeah, yeah.
It's tech or financial, we can argue. A AMC stock which we spoke about is actually financial. What else in financials apart from the obvious names?
No,
The private-
exchanges, they've done very well, and I mean, we have those, and also NSE. I think NSE, when it comes, the whole world and his uncle will want to jump on it. I don't know why our regulator is not allowing them to come out and list, because the centerpiece of India's economic engine is the stock market.
Yeah.
And the company has done a remarkably good job of keeping with the volumes which have exploded. I'll give you a staggering number. Do you know the value of options outstanding on index in India today? It's a staggering number. Our market cap is slightly below $4 trillion. The outstandings on the options market, on the indices, are $5.3 trillion.
It's more than mathematically it's right.
So it's staggering what is happening out there.
Right.
And imagine what is the volume you're able to handle. Imagine the old outcry days when we started in the market. 5 brokers have to go and capture, stand in the corner, and you make the bid and ask. This is the first tech stock of India. It's a tech platform.
Actually,
And cheap.
yes.
It is
Right?
trading at some 20 times
And
1 year
you can
forward.
buy it, I mean, even probably below that. But when it lists, you'll forget all these other guys. Same way we are all talking of what has happened with Zero, the Hand Grow, and Angel, and ICICI taking its ISEC inside. But these are platform plays. So payments mein paisa nahi banta hai. You make money on lending or wealth management or something, which you have direct plays available. So look, a lot of companies which pass off as tech companies in India are tech enabled. My own business was a tech enabled business, right? We couldn't have grown our brokerage business if we weren't allowed to sell our research to US. We couldn't be couriering them research reports. It was all going through the internet and exploded the market for us. So tech enabled is really India's forte. The youngsters who are building these platforms still have to get to what I call user interface. Because if you were to say, if you compare Flipkart with Amazon today, with no disrespect, the Amazon interface is far superior.
Just
The
experience
Netflix,
of
the
it all.
Netflix interface is far superior to what even a
Z5,
Z5 or a Sony can give
absolutely.
you. I mean, it's another thing that even Prime is pretty, sad.
Or
but
Disney
even Tata
Hotstar.
Neu is struggling with putting out their digital app. When you would say TCS should be able to build it, like it can't take them more than 6 months.
Yeah.
So that finessing of the user experience, because if we are used to now movie production values which are from Hollywood, Bollywood or Collywood or Tollywood or whatever you call them have to catch up. The same thing will apply to our consumer ones as well. It's all happening. The good news is it's all happening.
So this is the good news, but what's the bear case? What
So
could rub the Muskan off?
See, there's always the bear case. Always come. Like I said, you make money bottom up. You have to find companies from down.
Yeah.
But you lose money top down when unexpected things happen, which is outside your range of sight. The out of range of sight surely is this mess which the West has created in the financial space, where we've made them like the proverbial Pavlovian dog, where you're used to the 0% interest rates, and that regime has completely changed. The consumers still haven't realized because the pain has been borne by the central banks. You still don't have companies or people holding mortgages in US crying because they got locked into long-term rates. So while the Silicon Valley banks have blown up, you must think this bond disaster is also sitting inside JP Morgan and Wells Fargo. But the bulk of the nonsense is sitting in the central bank. And the central bank is funding the government. And the government is abusing its ability to throw money at any problem. They had no business throwing this kind of money post-COVID, sending checks to people's homes. And what they've done is they've created a class which is surviving by trading the markets or crypto and stuff like that, and not going up to work. Like when you talk of, say, a Zomato in India, the guy will deliver you, whatever you want at 60 rupees. You try to get a guy in US, even at $12, he's not willing to come to work for a DoorDash or a Grubhub.
Yeah.
So that fundamental change in the world, this regime change, I think lies ahead of us, and it could be painful. The second is geopolitical, which I think Fareed has spoken about a civilizational war. It's a very big term.
Yeah.
But if indeed you've now created this bloc of Russia, China, Iran, whatever, against the West, events are going to conspire to breaking up of this globalized world which was seamless.
Yeah.
Capital and goods move seamlessly. That disruption creates logistical challenges, inflation, interest rate hikes, unexpected shocks. So for those things, when you say, the small cap, mid cap bubble, you want to be careful because when things go wrong, there's no exit. In the large caps, we know we can, at least if I make a mistake, I can be out. In the small cap, you become the co-promoter of the company. So if you're willing to hold for 5 years, buy those by all means.
Yeah. But for internal economies like India, we're still safer
look,
than the rest of the world.
It's easy to say, but as the fifth largest economy going to third, we will integrate more and more with the world. So we can't wish away that our exports have to double from here. We've become the service centers now for all the big four and the consulting firms other than what IT was doing. So if you're going to service them and they have disruption there, that's going to affect you on exports. On imports, if oil prices go up, we are still vulnerable. We still haven't converted to the sort of solar and the green world, which still lies ahead of us. So we may be more resilient, but I don't think we can say we'll be unaffected. So the bear case is really external shocks.
Yeah.
And then of course we've had a K-shaped recovery in India. So while you and I and everyone else seem to be happy, we're buying better cars, bigger homes, the bottom of the pyramid has suffered and inflation has affected them.
Yeah.
And when you even see the Prime Minister standing up and saying we're going to give free food to half of India, that's telling you something. So we have to make sure that we can carry the whole country with us. And the trickle down actually, which capitalism is the only mechanism which can deliver it. At least I'm not a believer that you make everyone poorer and distribute the poverty. You have to make everyone richer and pull them up. So I'm hopeful this happens. And coming back, everything on balance. I have no axe to grind, I have no products to sell, no brokerage to run, no mutual fund to sell. I'm invested myself. That I really do think the next 20 years is really India's period. It's for us to lose.
Okay. So you've always believed in a concept of identifying the profit pool. Kamal and Dhamal, right? Two more words which Enam always uses, right? Kamal and Dhamal.
I didn't know that. I learned it from you.
Yeah, these are your words. Okay. Dhamal kahan hone wala hai?
I used to say skate to where the puck will be.
Yeah, मतलब हिंदी रूपांतर है बोल सकते हैं उसको. Always focus on. Yeah, that's another line I learned from you. Focus on where the puck is going to move. Okay, so profit pool. Right. Let's say IT was a profit pool 20 years ago. Power was a profit pool in 10 years ago.
See, the top 5 profit pools in India were historically, it was the energy and materials area. Yes. It was IT, it was banking, it was TMT, which largely was IT, telecoms, and then the consumers. Actually, all of them put together didn't make a lot of money. You had lever and include even Asian Paints and others. The consumer profit pool is still going to be chased very, very intensely. Okay. I still don't see that they overtake. I think the whole material space with what will happen with the housing and construction and infrastructure boom, the absolute number of profit made, aggregate, is still with the big 5, like I said. What you'll see coming out of the steel makers, the cement makers, the oil and gas majors is still very, very large. Banking is going to explode past this. I think it's a matter of time before SBI and HDFC both will cross $10 billion of net profit, which today you can only think of Reliance. But IT, I don't see them now keeping that pace with them. Telecom profit pool is gone. Consumers don't keep that profit pool. So it's the two big sort of levers for India will be the materials stroke manufacturing space and financials. Okay.
Where do you think
aggregate?
Where do you think a new $10 billion potential profit pool is getting created? A new profit pool which is getting created. For example, 20 years ago, IT profit pool was zero. It got created. Our exports today they're at $250 billion. 5 years, or maybe 8 years, or maybe 3 years. $7 trillion of naya profit.
See, I said that in terms of manufacturing, which was very neglected.
Okay.
If you take this whole EMS thing which I've been speaking about, if Apple says we want to go to 100 billion of exports, that's just one part of telecom, because the Samsungs and the Oppos and the Vivos are also still here. The consumer electronics space, if I'm saying we may not get to 200 million air conditioners, let's say you go to 50 million, your fridges can't stop at 10 million, your cars can't stop at 3 million and 4 million. The number which is going to come from electronic manufacturing in India as a space, from chemical manufacturing in India as a space, from the whole service center to the world as a space, these are large profit pools already visible and existing. And they're still tiny. When you actually will add up the whole EMS profit pool, it's a very, very tiny number. And it creates a lot of employment as well.
Shall we talk cricket now?
Yes, of course.
Yes.
With Manish Chokhani, it always has to be cricket before we wrap any show. You started,
Fingers
I'm
crossed.
starting.
Whoever.
Okay, so let's look at it. The comeback for Indian, I mean not a comeback, but the comeback, let's say for Virat Kohli in last 1 year has been nothing short of unreal.
Sure.
So from a stock market standpoint, for this Samvat, which will be the Virat Kohli story?
Virat Kohli, very easy, no? It is HDFC Bank.
Why not Reliance?
It's my pick, so
Okay.
I go.
HDFC Bank
I go
would be
with
the
HDFC.
Virat Kohli stock.
It can't be a $160 billion market cap, largest bank of the country,
Okay.
which is going from 4 trillion to 10 trillion. It can't peak out at 150 billion. Not possible.
Okay. Maxwell. Maxwell.
Glenn Maxwell, who's going to hit pound?
Who's cramping right now, but wait till he gets up.
I hope we don't cram, but well, there are quite a few actually in that space. But there'll be someone within financials will come out like that. It could be someone like that.
The Shuman Gill of next year.
The new sector, like I said, is things like EMS, things like chemicals, this whole consumer tech space. So I'm not recommending the stock, but the Zomatos and others are in a duopoly, and it's for them to lose this game now.
And finally, who's going to win the World Cup?
No question. I'm in blue.
So am I.
Beat blue.
I've just been the umpire right now.
Yeah.
Being neutral completely. But
See, this is India in all aspects. Even when you saw them going to the
Asian Games.
Asian Games,
Yeah, absolutely.
you see all spheres of society actually rise.
Yeah.
You'll see a lot of Indian brands going global. See, today you dismiss if our two-wheeler guys or our car guys are exporting abroad. But that's how we used to dismiss the Korean guys and the Chinese guys when they came in. And today they become household names in the world. This lies ahead of us.
the best is yet to come. अच्छे दिन नहीं, बहुत अच्छे दिन आने वाले हैं. ये दिवाली मुस्कान वाली है. And I guess, one side we talk about instant gratification and one side we talk about permanent gratification. I guess the best stock to buy is India.
Yeah.
Be long-term greedy.
Be long-term
Be
green.
long-term green, bleed blue. But I'm sure you're going for the World Cup final.
Yes.
Of course you are.
Well, thank
Okay.
you very much, and really appreciate your time. And it's just
Thanks for having me.
every time we interact, I think our viewers and both Aisha and me, we just get so much of learning.
Yeah.
And
I'm
thank you
just so
for-
relieved there's no RRR poster. Because my wife holds me accountable to that six-pack now.
Our anniversary is coming in 7 months. We'll get something going for you. Thank you very much, and really
Thank you.
appreciate your time.